Boyd, St. Bernard, you're on Winning at Life with Gregory Ricks. How can we help you, Boyd?
Hi, Gregory. I have a question. I guess I was with a major oil company, and they left us in St. Bernard. So basically, I rolled my 401k over into like an IRA, and I have somebody managing that for me. And about 4, maybe 5 weeks ago, I called them and discussed, hey, why don't we just take everything out? We've done really, really well in the last bunch of years. Why don't we just move it into cash and just wait this corona thing out? I felt as though it was coming, and I know the market, it doesn't take much to scare it, and it seems to be that's what happened. I was talked out of it, and my thing was, worst case, I might miss out if I'm wrong on a couple percent going up, and eventually I'll get back in, a month or two later. But, which I understand not jumping in and out is the right thing to do. I mean, I do read and, teach myself a lot about it. But seeing with this coming, why wouldn't we want to just get out?
Worked for a refinery over there, and they left. Another company took over. Looks like, Boyd, you separated from them a little while back when that takeover happened. Is that correct?
That's correct, yes.
Okay. So you've rolled your money over to an IRA, just bringing up some of the listeners that just tuned in. You rolled it over to an IRA. 5 weeks ago, you said that you were thinking about getting to cash. My question, and it didn't happen for you. They talked you out of it. Hate that when it happens, when you're right,
it was
Boyd.
ultimately my choice.
If you had been wrong, okay, yeah, I was wrong. But turns out you're kind of right, so it's kind of painful. But tell me this, how much of that money's correlated to stocks?
I'm pretty high in stocks. I got about 15 years left before I can retire.
Okay.
So I'm a little on the aggressive side, and I'm not. Go ahead.
What do you think your risk is? So
High.
well, that means that your risk probably would be, in the way we do it, you probably would have scored near about 70, which means 30% down for short term. You should be okay with that, but you're kind of telling us you're not. But on the other hand, you just said you have 15 years.
I'm totally okay with it, but I just wonder why, what's wrong with using it as a money-making opportunity? If something, I was,
Okay, you were
right
getting one part of it
yes,
right. I'm going to jump back in, Boyd. We're getting one part of it right. Okay, I feel like this is the time to get out. But the problem is you're going to want help getting back in, and probably put it on that financial professional. And that financial professional does not know when to get back in. And I'm going to give you a little market history real quick. I wanted to do this earlier, but this is the right time. If you'd have put 10,000 in the S&P 500, January 1 of 1980, at the end of 2018, you would have $659,591.
Yep.
If you had missed the best during that period, if you had missed the best 10 up days in the market, your value would be $318,071. And let's just make it easier. What if you just missed the 5 best days of the market during that period? Your value would be $427,041. So you have to get two things right. You got to get out at the right time, and then you got to get back in at probably the most scariest point ever, which is why you were getting out, because of the scary stuff. So what it tells me is it probably would have been better for you to dial it back some, which would have been my recommendation. Let's get you blended, because rebalancing will help you take advantage. And I don't like rebalancing on the way down. We'll rebalance when the grass is greener, so to speak. But you're not out trying to get back in. You're just making adjustments as you go. What I made a decision on a few weeks back is we dialed it back some more. We've been blending clients for months, and there's a lot of clients recently we went in and said, look, you're heavy. We want to get you blended, and we want to get all three asset classes. We want to remove some downside exposure. And what we did a few weeks back was I just dialed the stocks back 20%. And it turns out that could have been the wrong thing now. I would have to own it that way, but we dialed it back, and we will get that back to work when it's time to rebalance and get in to the mix there. And I'm fortunate we were right, but this wasn't like we were getting out. We just raised some cash, which worked out good. I think that would have been the better advice for you, and that's still something that can be done going forward, Boyd, because this is not the last time we're going to have ugliness in the next 15 years. You're going to experience this again.
I appreciate you telling me this, because now it makes a lot more sense to me. And I was being pretty hard on myself for not, because it ultimately was my decision, and I took his advice. So, yeah, if you don't time those few days that you got at the market, I see what you're saying. That makes a lot of sense, and I appreciate, that perspective, because I wasn't explained that way, and maybe going into some more binds and stuff would have been a smart thing to do, but don't get out the market.
Yeah, or some index linked in the mix, or raising some cash, profit taking. We had actually on some of our positions, one of our strategies, I'll call it, we had taken and put to cash. We were kind of overweighted. What does that mean? We had a lot of profit, so we down 9% back. So we had another area we had even additional 9% because we did some profit taking there, which is kind of what you're supposed to do as you go, not just keep riding this thing until it collapses. So
that makes sense.
So maybe some of your friends, give us a call. I have a daytime number, 504-832-9200, GregoryRicks.com. Boyd, thanks for calling in. That was a great conversation with you. Thank you, my friend.